Gold staged a strong rally in June, gaining by around 10% since the May lows. The precious metal has been benefiting from safe haven demand amid concerns about a global slowdown, combined with a depreciation in the US dollar. Joining me to discuss is Serge Berger from thesteadytrader.com. Serge, good to see you. So, do you think the positivity we've seen in June can continue, or is it largely over?
I think for the price of gold, we are really just kind of starting a move that I think a lot of people haven't really recognized yet. So what I like to do is I like to contextualize things in multiple time frames because it gives us perspective. So if you look at this chart, for example, this is gold futures, and we're going to look at this on a monthly basis. And let's just have a look at the price itself. Some of your viewers might be aware of the basic sort of rounding bottom patterns, or what do you want to call this thing. And again, this is a monthly chart, and you can see how we are breaking higher to the upside here on a monthly basis after basically been stuck in here for, gosh, 5 or 6 years. So I think this is a positive development, and I do think we could go higher. I wouldn't be surprised if I'm going to zoom in a little bit more into like a weekly chart. If we see closer to 15, 1600 in gold over the course of the next months, maybe a couple of quarters or so.
So you mentioned 15, 1600. Are those the key levels to watch? Do you think what are the best support and resistance we should be looking out for in terms of an indication of whether that rally can continue?
Yeah, sure. Well, I mean, if you do technical analysis 101, which I actually think in this case you could apply, I do think just shy of 1400, let's call it 1350, 60, just to kind of give it a rounding error, is probably pretty good support for right now. Again, I would probably go on a weekly closing basis on these things, because gold is one of those things that's notoriously difficult to time, in my opinion. It's more of a macro trade. So I think 13, 15, let's call it on the downside. As long as that holds, I think 1500 and then possibly 1600 is probably in the cards.
Okay, let's have a switch to the European equity market now with a look at the Euro Stoxx 50, because we had that pullback in May, but despite that, we're still up by around 20% year to date. So pretty impressive gains so far. I mean, if we were to extrapolate that across the full year, we'd be in for some serious 2019 returns. So does that suggest that we could be starting to see a potential fade in the rally?
Yeah, this is probably the most controversial of charts when I speak with our clients, particularly the larger ones. And you can look at the Stoxx 50 here. This is a monthly chart again, and you can see purely from a charting perspective, this series of higher lows that we've been making since 09 continues to be there, and we are just bumping up to and trying to get above this line. Now, I'm not sure this is any indication that we're going to go higher, but I'll show you something else. This is the Swiss market index, the SMI, and it has already broken higher to the upside on a monthly closing basis. Now, this is a different index, different constituents, all that kind of stuff. But I do think that the path of least resistance from a charting perspective does point higher, and I wouldn't be trying to short this market until we get a significant bearish reversal, meaning a significant down week with buyer exhaustion on a weekly basis. And right now, we just don't have that. So, I would be careful shorting it right now until we have that information.
So we're seeing a series of higher lows, but more on the resistance side, we're actually seeing some lower highs. I mean, does that suggest that the strength of gains is starting to wane at all?
Yeah, possibly. I think to me what's more concerning in a good way for the bulls is that we are coiling up, and you can see that we're continuously making higher lows up against that red line on top here. So it's kind of squishing in more and more towards that band of resistance, and ultimately you could see a pop above there. So again, I personally am very cautious on the short side here. But if we do see a bearish reversal, because the economic data is definitely there to support all that, I think it'd be a great short. But I think it's a little bit premature right now from a near-term perspective to do that.
All right, let's switch to the US equity market. Of course, we've been seeing fresh all-time highs of late, and one stock in particular that's been performing particularly well over the medium term has been Starbucks. In a sense, that kind of represents the equity bull case. It continues to go from strength to strength, and no signs of slowing. So, I mean, are we too late to get into this rally in Starbucks?
I think the Starbucks trade is a little bit silly, to be honest with you. I mean, we want to respect it, but I also think that Starbucks has to some extent become a bit of a consumer staple stock. Consumer staple stocks, I hate to compare this to a Procter & Gamble because it's not, but it's kind of been treated that way. This is the long-term chart that you can see all the way back into the late 2000s, and you can see here by any stretch of the imagination, we've reached the upper end of pretty much any trend. Now, where it gets crazier is if you zoom in a little bit more and you look at even just the run that we've had since, let's call it, well, about a year ago. Here, too, very, very steep rally coming out of an already long sort of upward trend. And then where it gets totally nuts is when you look at momentum indicators, such as the MACD. We call this a moving average convergence divergence indicator. You can see that's an all-time overbought level, and all-time is a long time. So I wouldn't touch this on a long side with a 30-foot pole. Here, very much like the stocks 50, if we do see a bearish reversal, and I think we're probably getting closer to it, this is definitely something you can try on the short side.
All right, interesting when we're calling takeaway coffee a consumer discretionary, but sorry, a consumer staple. So, but on that stock, I mean, are there key levels we should be looking out for? I mean, would you see it as a potential shorting opportunity, or are you trying to really stay clear of it?
Yeah, so no, I think it's a shorting opportunity. Again, you need to see price confirmed because, there's a lot of people out there who use 50 different indicators, but ultimately what's going to dictate and ultimately make you money is price, right? It's the ultimate arbiter. So we need some sort of price confirmation. We need an actual, bearish reversal where the stock is down a few percent and actually in a meaningful fashion to give us some momentum and telling us that the buyers are exhausted. We haven't had it yet, but I think we might be getting really close. You can see here we're just popping above the long-term trend lines, and I think we're getting very close to that. But I do think ultimately, if and when that gets going, I mean, the downside is definitely towards $80, likely into the mid-70s, which is a good chunk from here.
All right, Serge, thank you so much for your time as always.
Thank you.
That was Serge Berger from thesteadytrader.com. I'm Victoria Scholar, and thanks so much for watching IGTV.